First off, thank you guys for having me. It's been a little while since I did one of these with the IRA Club, and like Ramez said, I'm meeting new people every single week that are IRA Club customers. So I apologize in advance if any of this is redundant for you guys that have been around for a while. But please use this as a time to, like Ramez said, get your questions answered. This is not going to take an hour. I have, what is it, about 8 different slides to go through, and then we'll go through the demo of the platform, which just takes another 5 or 10 minutes. So all I'm trying to say is we're going to have plenty of time to answer your questions. So as Ram has alluded to, the Vanguards, the Fidelities, the Schwabs, etc. At the highest level, think of us as an alternative to that. At the end of the day, we are providing a platform that you can invest into the stock market through. We just happen to take a step further with our AI and the smart folios and things that we'll get into here in a second. And before I get into anything, I'll leave this up for a second. I know the QR code was on Ramez's little flyer as well. But if you guys are on your computer and want to scan this code, it'll take you right to my calendar link. If I don't know, maybe there's a question you don't feel comfortable asking in front of the group, or if you just want to have a sidebar, I'm happy to. Also, all my contact info is in the bottom left there. My only request is if you're gonna call me, just send me a text and say who you are first and that you were at this webinar. When I do things like this, you might be surprised how many people reach out, and half of them I don't even know who it is, and it's hard for me to get back to them. So with all that housekeeping kind of out of the way, let's get into it. And I wanted to start with this, and another thing Ram has kind of touched on a bit, but folks might be surprised that we find ourselves to be such good partners for each other. They're clearly different than a Fidelity, Vanguard, Schwab, etc., where they truly do allow you to invest into alternatives. It's a true self-directed IRA or 401k. You can go buy that house on 123 Green Street, as Ram has said. Where we kind of come in is, sometimes someone's just starting out with a new IRA and they want to get into alternatives in 6 months or a year or so, but they need a place to have their money grow now, and that's kind of where we can come in. So, from my standpoint, whether it's someone who has cash flow from their alternatives that they need to keep working for them, maybe it's your whole IRA or anything in between, we're just kind of here to help you with whatever you guys may need. So, to move on, just a little bit about our background, because I think it warrants spending at least 30 seconds to a minute on. Some of you guys have probably seen Randy on this webinar before. Others of you, and I'll share the AI circle at the end, but others have probably heard from Kelly on the AI circle. We're very fortunate to have 2 of the brightest minds in the industry on our side, and it's been a pleasure for me to be a part of. And go ahead, Ramez.
Dude, Lee, I'm going to tell everybody, if you guys have never had the opportunity to listen to Kelly, please join their AI circle. He talks always anything and everything related around stocks. This is basically the brainchild behind the AI Smartfolios. I think the only other person that I know has got a higher IQ than Dennis Blitz, our president and founder, is this man right here. So definitely highly recommend. I know, Lee, you are going to share that or throw that in the chat, the AI circle that you guys do.
Yep, it'll be at the end.
Okay, awesome. Make sure that you guys jump on board of that. Promise you will learn something.
Perfect. And there's going to be a QR code for that too. So, but if you find us on YouTube, you'll see when our next live streams are and all of that. But like Ramez said, Kelly, along with Randy, but Kelly's the one that comes from the Wall Street background. He managed really billions of dollars at any given moment for institutions or some places you've probably heard of, like Morgan Stanley, Deutsche Bank. For instance, I'll just say this. They trusted him so much that they gave him the private assets of the bank to manage with, at that time, what was just algorithms. We didn't have AI back then. So think of this as, and I'll spare you the whole story, but Kelly's true mission for wanting to build this company with Randy was to give the sophistication and the tools that the hedge funds, the super high net worth folks have, but to the masses, to the everyday person that's got an IRA or a brokerage account, or maybe they have a trust that they need to invest some money into, or excuse me, through. Think of it as getting that sophistication, but you don't need to have $100 million to your name to be able to have someone like Kelly or someone like our system managing things for you. So that's just a little about our background. And Ramez, feel free to stop me. I see some chats and questions coming in. I'm not reading them, but if there's something
I,
important, go
I,
ahead.
Here's the thing: is a lot of the questions that they're already asking. Number person Ivan asks, "How do I get an iFlip account?" I just gave you the opt-in link. I'm gonna go through that through the end, okay? And somebody asks, "How reliable is the AI?" He's going to be talking about it, and we will address a lot of these questions, and some of them may get answered while Lee's talking.
Yep,
So
perfect.
I'm gonna give you like 10, 15 minutes, and then I'll chime in and into some of these questions.
Sounds good. So on the premise of building this company, really the challenges for the average person to invest, and we've all heard, you have to have your money working for you, or you're losing to inflation. It's you can't save your way to retirement, I guess would be the point. And quite frankly, like the retail person just doesn't have the tools that someone at Goldman Sachs or name any big place has. People tend to want to trade their own money because they don't want to pay an advisor and they lose, or they pay an advisor and they realize they're racking up all these fees, and we can get into complicated fee structures later. But the whole point of our platform, and I'm not trying to demean or the word AI or what it does, because it truly does make us difference. But what it all boils down to is we're using our AI to basically have it pick and choose when it's the right times for money to be working for you. Just to throw numbers around here, if the AI is sensing from a risk reward perspective that, we're risking 10% to make 2%, that's not a bet, for lack of a better word, that we want to make. Of course, you'd love it if, hey, we're going to risk 2% and make 10%. Think of the AI as being able to calculate. We use around 190 different parameters. Not that anyone maybe needs to know that, but we have all these different calculations going in the background. And what it all is boiling down to is, should you own stock X, or should you own, ABC, etc. And this is fully automated for you. So we'll get into, when I get it to the demo, of how you kind of set things up and how you give the AI directions as to what you want it to buy and sell for you. But just know that what truly makes us different from a Schwab, Fidelity, etc., is that we actually will have the AI pull money out of the market when things look dangerous. So if we were to have had this webinar 3 months ago or so, in April when the market was tanking, it would have been a completely different demo than the one I'll give you today. You'd have seen that we would own next to nothing, and the AI had a ton of money in cash, and that's absolutely by design. So at the end of the day, we're trying to preserve, protect, and grow your wealth, and the preserving part and protecting it are equally, if not more important than the growing it. So this is what we know. Long term definitely makes sense. We are by no means a high frequently trading platform. I find the word trading versus investing to be two different things. But what we find is that you do need to think long term. The problem, though, is there's just a better way to do things. If you buy and hold, you're susceptible to whatever the market gives you. So when we layer on this AI, we're able to enable better performance, again, through skipping dips. And sometimes it's just that, hey, we have some really well performing stocks that are in our smart folios and they're beating the market by itself. Other times, like a chart I'll show you next, a couple years back in 2022, we actually lost around 3.5 or 4%, but the market lost around 20, and we beat the market by, call it, 16 or 17%. Sometimes we're going to have a losing year and still be very proud of it. And honestly, those are the ones that I'm personally most proud of, because it's a lot easier to get 4 or 5 or 6% back in the market than it is, 20, 30, etc.
Well, that's how I explain it, Lee, to people is like, would you rather lose 20% or would you rather lose 3%? That's kind of
Totally.
that's how I kind of break it down, because most people don't understand you got to double the percentages get to that to get back to that break even point. So keep that in mind.
Yeah, I mean, way back when, I say way back, it was 17 years ago now, but 2008, a lot of people lost half, if not more, of what they had invested. Like, if you lose half because it's easy math, you do have to make 100% on what's left over to get back to where you were square one. So even, a year like that, if you lost 10%, you'd be pretty thrilled about it.
Well, most people don't realize that took 4.8 years to get to your break-even point. So if you had $500,000, you were approaching retirement. Let's say you're 56, 57 years old, and you lost half. Well, guess what? You couldn't retire anymore at 60 or 62. You had to work 5 years to get back to that $500,000 break-even point.
Yep. The middle part there, portfolio protection, I've discussed that I think enough, but um, we think it should be table stakes. It shouldn't be a luxury that's reserved for, someone who has, a Goldman Sachs type relationship or anything like that. And honestly, I think that's underappreciated. People are so used to the buy and hold, they don't know any other way. And that's part of our job to kind of change the mindset of, hey, maybe there is a better way to do this in the market. And then I know the thing Ramez loves the most about us, or maybe not the most to put words into his mouth, but the IRA Club and iFlip's fee structure is very comparable. We're a subscription based product, very transparent, which in the financial services world, transparency is just not something that you get. Go
Lee,
ahead.
that no, you could put those words in my mouth. Okay, because one of the things that I negotiated with Randy and Kelly from day one is IRA Club does not believe in percentage-based models. We believe in flat fees. Randy basically said I couldn't agree with you more because that's what we believe in also. We'll break down the fee structure a little bit later, but understanding that percentage-based models will eat away a third of what you make within the 401k or IRA's longevity, knowing that you can't touch it until 59 and a half. So, and again, we'll break down those numbers, Lee, a little bit later.
Yep. Just to put a little color on that, your 1% right now, if your account grows later down the road and your AUM fee, your percentage based fee stays the same, when you're getting closer to retirement, you're just paying more and more in fees just solely because your account grew.
100% agree with you. Got a couple questions, Lee.
Go ahead.
Knew these questions were going to pop up. B asks, how reliable and trustworthy is the AI assisted investing? And then Ivan follows up with, in the chat, I get a lot of emails and texts about daily basics and about bots and how robo advisors are better than you doing it on your own. He goes, I feel like it's a scam. However, I do feel more confident that IRA Club is a part of iFlip. How trustworthy is the AI to make the investments grow and protect? And I got another one, same question, actually three more that are the same question.
Perfect. So the first one is a perfect segue into this. How does it work? Again, quite frankly, and I'm just showing the losses. So I guess maybe I'm being pessimistic here, but this is truly what makes us stand out. The 2022, again, the average loss was right around 20%. A few years earlier, there was another 20% correction. We all remember COVID at the start of 2020. At one point, you would have lost over a third of what you had. And I don't mean that. As in the past, I'm sure a lot of us here we're living that. It's just the reality that these corrections happen from time to time. If and I'm not by any means making any guarantees here because of course none of us are allowed to do that. But if you're able just to take the whatever the market gives you on a good year, but lose 25% less than what the market loses in those really bad years, everyone here would of course love that. It's
Well,
hard. Go ahead.
just no, Lee. I mean, look at the trends. The trend is 8 to 10 years, right? Give or take. Every 8 to 10 years, there is a significant dip, right? And if the AI, and if knowing, actually, I'm gonna take a step back, Lee. Knowing if you have an employer's 401k, for example, knowing that you can't touch it, who is taking all of the risk? You.
Yep.
That's the $1 million question. The only time that you get paid when you have an employer's 401k is when the market is up. But just imagine if there was a crisis, like again, the 20, you losing 20%. Well, just so you know, it took 1.8 years to get to that break-even point for COVID. But I talked about 2000. I talk about 2008. It takes years when there's those big, massive dips. It takes years to recuperate that money. So again, why we talk a lot about alternatives, real estate, land. But again, it's diversification. We don't have a problem with the stock market. But if the AI is there to protect it, your retirement, knowing that you can't touch it anyways. Why not take advantage of it? Okay. Again, this is a self-directed retirement account. I can't endorse anything. I can't choose the stocks for you. For those of you that are joining a little bit later, I noticed about 20 more individuals jumped on a little bit later. And then yes, you will get those QR codes. I think Rox already asked for those from Lee.
Cool.
I will make sure we update all of that stuff for you guys, and you will receive this recording with the PowerPoint presentation. Okay. And I will show you where to find iFlip on the IRA Club website and go through that process again.
Perfect. So just maybe one last sentence, and it says at the bottom in that bullet point there. But what this all boils down to is that wealth creation, it is achieved over time. No one's, I can't say no one, crazy things happen in the world, but most people aren't getting, rich yesterday or tomorrow. Like, it doesn't happen overnight. It happens, of course, by good habits of making your contributions to your IRAs, investing that money into, good investments. But when it comes to us in the stock market, like, you can only do that through good risk management. If every 5 to 10 years a quarter of your portfolio is wiped out, like, you're just treadmill running, you're not getting ahead. No matter how much you're able to contribute into these IRAs, it won't get you to the point where you want to be when you come to be, in your 50s or 60s and want to stop working. So we're not I say this all the time, we're the not flashy, we're the boring, we're the unsexy thing, because we talk about losing less and all these quote unquote boring things, but boy, is it very powerful. And I know a lot of folks the last, gosh, since I've been doing this around 7 years, that have been very thankful every time the market crashes that they have something like our platform to manage risk.
iFlip owns the rights to the smartfolios. They are the tech company and they charge $7 a month. So iFlip needs to make money somewhere or another. Optionality is our broker dealer. It is a flat fee model. To be clear, 0 to 10,000 is $0 a month. 10,000 to 25,000 is $10 a month. Go all the way to $10,000 or plus or more. Okay, 10,000, 200, 500,000, a million. What's the most that iFlip or optionality securities can take from you?
140.
$140 a year. Lee, is there a discount if you pay up front for the whole year?
So just to be clear, the what Ramez is showing right now is the optionality fee schedule, like it
Correct.
says in the title. So basically, iFlip always charges you $7 a month, regardless of how much is in your account. If your account is over $10,000, the broker is always, excuse me, not always, is also going to charge you a fee. This comes down to honestly logistics of what we were asked to do by FINRA and some others. Again, we're a software company. We are not a licensed broker dealer. That's why a reason why we can't give advice and all that. In short, we had a different model before that was almost identical to this, but FINRA and the SEC said basically, hey, you guys need to charge everyone the same amount and have the difference between your lowest tier and whatever someone was charging you charged through the broker. So this is what Ramez is showing. Go ahead.
Are there any, somebody just asked, is there any other fees associated? Like, for example, they hear me talk a lot about 12B1 fees or transactional fees. Is there any
Yeah.
fees associated with this
Thanks for
outside
bringing
of
that
what you
up.
see?
Yeah, so there are no other fees, especially through the IRA Club, which is incredible. We have ICT. Every time I try to say the words, I mix up the second and the third one, but instant cash transfer. Basically, correct me if this is wrong. I'm 99% sure it's not, but I can almost guarantee that the IRA Club is sending us money or we're sending money back on a daily basis. Basically, think of 10 of you in the chat all want to fund their iFlip account on the same day. That will come over as one transfer, if you will, and it gets dispersed into the proper accounts. So there's
So,
no wire fees, no nothing like that going
Lee,
either way.
Thank you for clarifying that because that was another question was like, is there any wire transfer? No, there are no wire transfers. None of that exists. This is to help you guys. I want you to understand this. Fidelity, Vanguard, Schwab, I don't care what they say to you, they're charging you a percentage of some sort. Okay. National average, especially within an employer's 401k, is 2.27%. Managed accounts are higher. Obviously, some are going to be lower, could vary anywhere between 50 basis points to as high as 5%. It doesn't matter. It just, you don't know, sometimes know what you're being charged. I hate to say this, but 67% of Americans have no idea what their fees are. At the end of the day, I'm going to give you an example. Let's say you had $100,000 at Fidelity, Vanguard, Schwab, whoever it is that you're using, okay? Or if it's a managed account through a fiduciary. Let's just say I like to always look at things decade by decade. Assuming you don't even contribute a single dollar or you get a dividend or anything of that nature. And is it safe to say 10% S&P 500, Lee, right? Is that
Yeah.
the stand, right? And what did I say that you guys were charged? Is it I'm sorry, because this is a flat fee model,
Yep.
1540. Does that look right? Hold on. Nope.
Yeah.
Oh, nope. Nope.
1680.
Well, didn't Randy tell me it's discounted if you pay up front for the whole year? It's 1580 or something like that.
Yeah, so
$100 off.
you can pay the iFlip fees, the optionality fees, a different topic.
Okay.
But you can pay for a year and get 25% off. Essentially, you get 3 months for free.
Okay. Let's just say hypothetical. No, you decide not to go that route. The most you could take is 1,680. Correct me if I'm wrong, Lee.
Yep.
Assuming it's 10%, depending on the smartfolio you're choosing. So 1 to 3% is the national average. You're saving $35,000 right off the bat. That's assuming it's 10 years at 100,000. Imagine if you had 200,000. That's $100,000 in a 10-year grace period. Imagine though you had it for 15 years. 230,000 on a 10% return. That is the difference between flat fee models and percentage based models. I need you guys as IRA Club members to understand that at the end of the day. This is where you get eaten alive. This is what I refer to as termites nitpicking at your retirement.
The food chain of the financial services world, as we call it.
Yeah, remember that. Okay. So that's a very big deal. You could play with those numbers on your own. I'm just giving you an example. Okay. Imagine if somebody had 500,000. That's 655,000 because the most that optionality could take from you is 1,680 bucks and the power of compounding. All right. So with that being said, just trying to want to drive that home for those that are listening and showing you how easy it is to log into your account. We don't charge an asset fee. You click here. You're going to put your username, your password. It may ask me for a,
Two-factor.
yeah. Nope. Takes you
Cool.
straight to your Roth IRA Club account. This is my demo account. You can see my 1, 2, 3 AI Smartfolios. Let's talk about, before I get into that, let's talk about funding. So if you have an IRA Club account, you've opted in, takes 24 to 48 hours, or you maybe have a current, iFlip account, you would simply go to funding, move cash from your IRA Club account to your iFlip account. Click here. You're going to put in your first name, last name, email, your IRA account number, telephone number, and the amount that you want to transfer over. You don't have to transfer over the whole thing. Remember to always keep a $500 minimum balance, especially if you have an alternative asset. Okay? And once you hit next, you're going to sign via the investment directions form, initial, submit. Money will typically take 24 to 72 hours to process over back to iFlip. When you go back to the home page, you're going to see where it says buying power. So if you moved over, let's say $5,000, you will see $5,000 right over here. You simply hit on invest. You could search your own stocks if you choose to do so. Or Lee, you could maybe talk a little bit about the AI Smartfolios, but these are your 3 core Smartfolios. Correct me if I'm wrong.
Yep.
Conservative, balanced, aggressive. Let's just say hypothetical, you click on conservative. You can see the track record from 2019 to 2025 right over here. You could see it down to the dollar amount. You can see what it's currently allocated in. Okay, let's move to, let's say, the aggressive portfolio. You can see what it's currently, I'm sorry, from 2019 to 2025. You can see your returns right over here. You can see it monthly, quarterly. You could see what it's currently allocated in right over here. But explain, Lee, why they don't have on the top right side that orange dot, like NVIDIA, for example, or
Yeah. So to break down what I was discussing on the few slides even more into depth here, and you can stay on that allocation
sorry.
section if you'd like. No, you're good. So the AI is picking and choosing essentially which stocks you're going to own for that day, I guess you could say. So anything that has an orange dot next to it, that's just one way of knowing what the AI currently has us invested into. To give you a hypothetical scenario, like Nvidia, for instance, does not have the orange dot next to it, but Apple does. Maybe tomorrow the AI wants to buy Nvidia and sell Apple, like it would do that automatically when the market opens. It's not going to make a trade every single day by any means, but what the AI does is it is checking your positions, as I call them, or your account every single day to see if you need to make any trades. Back to the risk reward and all of that. It's doing that on a daily basis, even if it's not making a trade every day. And honestly, we're not making a ton of trades.
So this is the activity I'm assuming between all the AI smartfolios. And you could see because most people don't know this. Remember when I said, Lee, I was skeptical in the very beginning? So this is the day, September 17th, 2021. I put in 10,000. 10,000. I never put a dollar more, dollar less. These are my returns from the day that I started right over here. Lee, you talked about it. 2022, the average 401k, according to Fidelity, Vanguard, lost about 23%.
Yeah. And
This is,
maybe to stay there for a second, like
yeah,
we just showed the market lost 20% in that year. So where's that other 3.5% where the average 401k lost, more than what the market did? Fees.
fees. And that's the other thing we were trying to drive home. But again, to Ivan and a few of you that asked, like, how reliable is it? Well, here you go. These are the one, two, three AI smartfolios that I have. By the way, I'm aggressive by nature. I'm not telling you that you have to be aggressive. I'm just telling you this is just me. This is a demo account. I have multiple accounts. I have a cash account. I have a self-directed simple account. I have a traditional account. You could open up as many accounts as you want. Do the fees change? Is it $7 per account, Lee, or is it
Yeah. So the asset-based fee or the optionality one, it's just one fee. So say you have four accounts that are $50,000. The sum of all of those is well over $100,000. Optionality would charge you 140, and then iFlip's just going to charge you $7 per account that you have. So again, if you had four accounts, that would be four times seven, which is $28. So that's
all?
it. We
That's wait. So between all four accounts, you're basically paying just that one fee, just
yeah.
depending on
So
the value of the four accounts.
essentially, if you have one account over 100 grand, or if five or four, 10 doesn't really matter, equate to being over or add up to be over $100,000, the asset based fee is the same. If you had $200,000 accounts, you're not paying 140 times two, which would be 280. So essentially, if you're at 100 grand, your other accounts they're $7. I can't say they're free, but basically,
Okay, so I mean, I didn't honestly, Lee, I didn't know that actual structure, but wow. So you're trying to tell me like the minor accounts
I
that
was just
that
gonna
was
go there.
okay. Go ahead, go ahead, go ahead, go
No,
ahead.
I don't want to steal your thunder.
No,
Essentially,
I didn't even know that. I thought the minor accounts were separate and they were being charged $7. So the individuals that are under the age of 18, they're added to these accounts underneath the guardian's account, like the mother, the father.
yeah, and that's required, of course, as well. When someone's under 18, they're not old enough for us to be able to set up an account in their name. It'll be, there will be I don't want to mix up the words here, but a custodian, like the parent or a guardian is maybe a better word to use. It'll be in, say, Ramez's name and his daughter, or, Joe Smith and his son. Like you'll see all those accounts for you and all of your kids under one login, just like Ramez was showing you his simple IRA, his Roth, etc. So yes.
Okay, so every single person that is listening, as much as I love you guys, we care more about your children, okay? Because they have something that we don't have, and that's time. Highly, highly, if it's already, it's basically for free, is what you're saying, Lee. But as it grows with the forgive me, the Guardian. So it's basically a free account if you think about it.
Yep.
Oh my God. All right. Well, no,
They'll
let's take it a step back. You are paying the 195 as membership fee at IRA Club, but still, I mean, that is, guys, you should be definitely thinking about that. No exaggeration. That's a really big deal. And just, I don't care. Throw it in the S&P 500 for all I care.
Yep.
But I still can't choose it for you. You still have to decide. It is a self-directed retirement account. That's awesome, Lee. Thank you for clarifying that because I had no idea.
Yep.
So there's the QR code. Lee and Lourdes are the main 2 points of contact for IRA Club. Maybe you want to cut and paste that in the chat too. For the
Yeah, I can get the hyperlink here in a second. Just before I forget this
Yep.
other one, and I'll get my scheduling link on
Oh,
in the chat next. But the AI Circle, this is a thing we do at least twice a month, sometimes 3 times a month. But if you liked anything that we said here, or even just want to learn more about the markets, Kelly and I do a twice a month live stream on our YouTube channel. You can find us online there on YouTube, or if you scan this QR code or just save this hyperlink here, it's always going to point you into the direction of our next live stream. So if you scan it now, it's going to say August 6th at 5:30 is our next live stream, and then 2 weeks after that will be the next one.
take care, everybody. Till next time.
See you guys.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.